Good morning, guys. Welcome to this Monday, October 20th. And it's like October 20th, November, December 20th, and we got Christmas. So 2 more months, 2 months, then we have Christmas. As you know, as you don't start panicking or anything. Anyway, the market is in a good mood, at least to get started. We'll see if we can hold on to that. We started off a little bit to the upside, and you can see here from Friday's crazy stuff. We were way down here on the Friday 65.70, and then we were right back up again, and we closed towards the highs, and we had a pretty good move in the a pretty good pop at the very end there. So it's we were up there. It didn't take out the 67.15 to 20s, but we did that in overnight, and we're kind of holding there right now. So we're in a pretty good spot to potentially take this back higher. But you can see we have been building value right here in the same area of this same high volume area around that 6,700 level. That's kind of where we've been going back and forth, building value, and we'll see when we get a piece of news is going to drive this either higher or lower. But you can see they're probing it pretty hard. And the interesting part is that we have a few different times they've been trying to take this lower, and they have not been able to do it. This is defending the 6600s, and so far we've been trading higher from there. So I would say we're going to start off range bound, same as before, and we're going to look for fadey edges above that 6750s. I would lean in on the long side. Below this area, the 66 30 to 50s, we lean in on the short side. In between, we just traded as a range bound market. So initially looking for early strength given the overnight. See if we can retest these highs, maybe take it higher. So, so looking to buy against 67 15 to 20s, 67 10s down to the 66.95s for rotations up. I would probably take off the long buyers below 67.10 pretty aggressively, but I would wait for confirmation 66.95 before I really start looking for a short rotation to the downside. That's kind of the if you're going to see early weakness turn into a little bit more selling, they watch that 66.95 come out. But the first two levels, 67, 10 to 15s, or 15 to 20s, 67 10s for rotations up. We have this little area, the two little ledges here, the 6700s down to the 66.95. The last one I look to buy against, at least from a long perspective, rotations up. And if they start taking this higher, looking for shorts against the 6730s, 6750s for rotations back down. And then we'll see how far they can take it. Now we have earnings season kicking in. We have the CPI number coming out on Friday, I believe. And they actually release that number. So Friday, we're going to see a CPI number come out. We still have the government shutdown going on, and so far it's just going to get uglier as time goes on. So we'll see how bad it's going to get. But it's all those things are happening, and of course we have the big whale in the room, which is going to be the Chinese-US relationship, or decoupling, or de-risking, or whatever that's going to turn into be. So they're going to be meeting, I guess, in South Korea. That's, I guess, is on. So we'll see how that shakes out. But there's a lot of cross currents going on still. The good news, Middle East, this looks like it's calmed down. There's some little skirmishes over the weekend, but that thing looks calm. So I think the pressure on oil is going to stay to the downside. But overall, as oil goes down, I mean, that's going to help the economy as well. So that's going to be another tailwind. But between earnings season, the Chinese tariff issues, government shutdown, we got a few cross currents to pay attention to. So that's how we get started on the ES, slight bias to the upside, looking to buy early weakness down to that 67.10s. They back off below 67.10s, taking off the long bias, but still looking to buy against that 66.95. And if they do start taking this lower, if they do start taking this lower, we have We can go down all the way down here to these areas, the 67, 30s up to the 50s. These three support areas, that's where you have to worry about the short side. If they come out, then we're not range bound any longer, and then we are heading lower. So if we probe there, you can see 1, 2, 3, 4, 5 times, no, 4 times in the last few days we've been down there probing. Every time it's getting bought. So I'm pretty confident that it's going to hold on. That I don't think that's going to change unless something happens in the overall picture which changes the overall calculation. But so far it looks like people are buying when they are heading lower, or when they're starting getting into these lower territories. So that's the ES to get started. Looking at the bonds and Nasdaq, so bond market not doing much. They've been slowly drifting to the upside. And we had a pretty good pop here Friday. They backed off pretty hard. They were trading well below that in the day session Friday. So far, we haven't really traded a whole lot lower. That's kind of holding there. But as you can see, we're kind of taking a little leg higher. So we're in the 118s now. As long as they hold above that 118s, we have a shot at taking this higher. So I would just stay on the long side. I'd say they're primarily range bound, but they're leaning towards the long side of the market, looking to buy against that 1814s, 18.6s for rotations up, maybe down to that 1728 to 1730. If they start trading below the 118s, and pretty much taking out this low volume area between 28 and 1728 and the 118s. If that comes out, I would be leaning in on the short side and see how far they can take it on the downside. That's the bonds for you. Not really moving a whole lot, but they're a little bit to the upside. So I think this is, and that was primarily due to a risk on kind of a scenario. Or sorry, risk off rotation out of stocks into bonds for safety. So, and more of a risk off in the stock market caused a little pop on the bonds, and so far they're holding it. So I guess people are just kind of holding on and see what's going to happen. Especially, I think the biggest issue is going to be the Chinese situation, because those headlines comes out of nowhere, and that could really set you off on the wrong side of things. Nasdaq. Here's my F1 on the Nasdaq. And we are pretty much in a spot there. They're taking out this area, the 25,000s, trading higher. And so far, it looks to me that they're really in a spot where they can get right back up here. Yeah, still been building value in the lower area for a while. Fridays, again, big move to the downside. They've been probing this area, the 24,500s down to the 24,400s. So far, that's getting bought. And the same as the ES, the weakness is getting bought, and we are right back up again. So I'm thinking that looking forward to decent earnings and a good reason for the stock market to trade higher. The only thing which can knock it down would be the US-Chinese thing, or maybe if some earnings comes out and not as good, it could potentially knock things down as well. But otherwise, we have a pretty good shot at taking this higher. But the weakness so far has just been that rotation down. So 25 to 25 for 500-600 points. That's not bad at all. It's just a couple of percentage points. So looking at buy weakness, 25,060, 40s, 980, 24 980s, 24 950s for rotations back up again. Now, if the trade take out this area, little pop-up area we had from Friday, these two support areas, the 980 and the 950s, I would take off the long bias and go back range bound, back looking for retracement back in its lower range again. Not until they take out that 24,600s on the downside, so am I going to worry about the short side in a bigger way. Now, it doesn't mean that if they are at an upper level like this and they start backing off, trying a short trade, reasonably aggressive around maybe the London low comes out, trying a short trade and see if this pullback turns into a little bit more than just morning early weakness. But sometimes that happens. You get the early weakness thing turns into a pretty good sell-off. But you had to kind of get in pretty aggressively on that to get in on it. So, and it's always the conflict is always buying weakness versus is this going to pull down a little bit further. But What you can lean against is really support areas, right? The 40s and the 70s. I'll probably lean on the 40s. If that comes out 30 to 40s here, maybe try a short trade and see if they're going to try to take it lower. And if they just shake you out or stop you out, just run the stops below the obvious and then you're on the wrong side of it, that's fine. I mean that's part of trading. But that would give you an opportunity for a short getting in early on a little bit more than just early weakness. It is always that. I mean, if you look at buying early weakness, the first three support areas are the ones when they take out the second, maybe the third, that's when you had to get short if you want to be part of a bigger pull down, or if that early weakness is going to turn into something more. But that's also the areas you're looking to buy against. So that's the judgment. Am I going to tie in a long trade or against support, or am I looking for further weakness? But usually you get a little bit of time, and if the momentum is really just pounding it, well, the short opportunity is pretty obvious at that point. The hardest part there is just to stick with it and be able to get in and stay in. You can get in and then you just get flat out shaken out of that trade because it's so volatile when that early weakness turns into a little bit more of a sell-off. All right, so gold and so we have the bonds and Nasdaq sorted. Gold is something I'm not touching I'm just kind of holding off on that unless I get really good opportunities. They are all over the freaking place. It is. I remember I took my gold chart and made it and compressed it a bit, and look at that. It still looks like crazy. So its volatility and range is crazy. So that just tells you that stay out of it unless you get really good opportunities, really good trade location. Otherwise, you're just going to get run over. So buying weakness for rotations up on gold. Looks to me I was going to say start off range bound, but now they're taking out the 4280. So and now I'm starting going to lean towards the long side again. Looks like they're heading back up again. So man, these guys blew through 4,000. They didn't barely stop there. They're up to 4,300s, and let's see how far they're going to take it. It's I would just stay on the long side on gold and see how aggressive these guys want to be about it. So you can split out Y period now and let's see how that. Yeah. So as long as they hold about that 4280, you guys going to stay on the long side. So I would look at buy that reverse retest at 4280, and at this point also the 4260s. I was going to start off range bound looking to buy weakness anyway, but at this point I'm just going to stay on the long side of things. But since they already taken out the resistance areas, I was eyeing this morning 4280s. And so I would look to buy against that 4280s, the 4260s, 63s. And if they take out the 63s, I would take off the long bias and go back range bound and look for me more of a retracement trade. But it could go either way. Gold is going to be crazy volatile, but you want to trade it from the long side of the market. Look at that, just taking off here. And these bars are huge. This bar right there is that from the 84s up to the 95s. Look at that. Crazy. So if you're getting in on a trade like that, then you're now it's just pushing it. So if you just bought in anywhere on this bar, you would have been in at least break-even territory. But watch them retrace that bar and just flat out shake you out as well. So that's crazy stuff. So gold straight up on the long side of the market right now. Oil. Oil is to the downside, and I would trade it as such. So they made a move to the downside as that Israeli conflict kind of got settled. As peace agreement in the Middle East, risk premium coming off on oil, and we are down $10 from that when they started like some 65, 64, 65 is where they used to trade it, and now they're down to 55s. So that's a good sign. We were trading it up here, remember up here, and then peace agreements are kicking in. And we start seeing this move to the downside, and at this point we are definitely pointed lower. We're in a move out of the middle to the downside. So I would trade it as such. I would look to sell strength as 57s. No, not what I wanted to do. Yeah, so I would look to sell against the 57s, 5740s, 5770s for rotations back down. If they get up and above that 5770s, take off the short bias and go back range bound at that point. Because they may not just go straight down. They may go down a little bit like this, go back up and trade a little bit back and forth. But unless they start taking out that 5770s, I would stay on the short side, look to sell strength. Above it, I would just go back range bound. And if they get up above 59, I would start looking at the long side and see how far they want to retrace it. At that point, there may be something else going on driving short-term prices on oil. So looking to sell strength, watch that level, the 59. That would be a bigger issue. But I would look to sell strength in these first levels up, the 56, 50, so 57s, 5740s up to that 5770s for rotations now. And not going to be very aggressive buying it. It's we are in the move out in the middle to the downside, so we want to be careful about that. So that's kind of where we just kind of leave it alone for a bit. All right. So that's oil. Look at gold, and you can see gold is still doing its thing. Look at that. And here, this is that big bar. Look at that. Watch that them retrace this bar here. It'd be crazy. Anyway, so gold long side of the market, oil range bound with the bias to the downside, and well, I would take from the short side to get started at least. So oil short side of the market, gold long side of the market, and then let's see how this develops. All right, back to the ES. I'm probably not gonna. Oil is kind of not that exciting, hasn't been for a while. Gold is very exciting, but too volatile right now, so I kind of stay out of it for a bit. But ES and Nasdaq definitely looks have it. They have an opportunity to make a little bit, make it go out of it. Just have to hold on to the gains they just made Friday, and if this overnight holds, we may have a shot at it. If not, remember we are up against upper areas of resistance, so this will be areas to look for shorts against. Um, until they start breaking out of the obvious resistance area. So they take out these two resistance areas, the 6730, 6750s. Yeah, then I would lean in on the long side on them. But we're up here against resistance, so I would be looking for shorts up here. Same on the Nasdaq until the Nasdaq clears its hurdles on the upside as well. But initially, we're starting from the long side. Let's see if they can retest those highs and potentially take it higher. Alrighty, guys, we'll leave it there. I'll see you back at 11:30 for the next update. So good trading, guys, and I'll see you back then.